So have you ever found yourself completely stressed out, overthinking, questioning which way the market's going to go, and you always feel like you're making the wrong decision? Today in this video, we are going to break down a very simple way to trade the market open. I found very simple ways to identify areas of value, areas that give you great opportunity to identify who's taking control of the market with low risk. Now, there's tons of YouTube videos out there giving out tons of strategies. I'm not here to persuade you to do anything. All I want to do is show you a very simple 3-step strategy that helps me get in and out of the market with way less thinking. See, I'm a very simple individual. If it's not simple, I'm not going to be able to repeat it. Trading is one of those things you can make it as complicated as you'd like. And a lot of people think just because they're not profitable, it's got to be complicated. On the contrary, until it's simple, there's no way you're going to be profitable. You have to develop a very simple approach that you can easily execute. Otherwise, you are never going to get any sort of consistent results. So the day we're going to be talking about is January 6, 2025, right? So this is my Discord over here. This is where me and all the High Performance Trader members meet up each and every single day. If you guys like this video, if you like this content, and you like this philosophy I'm going to teach you today, feel free to get more affiliated and click the links below. Subscribe to our newsletter, subscribe to our data reviews, and take the next step and join our team, right? So the day we're talking about is January 6, 2025. SPY, pre-market plan. Notice here, every day I post a pre-market plan, I post it in a non-biased way. I try to remain as completely objective as possible. This means I do no assuming. I let the market tell me what she's going to do based on how she reacts to the areas of value. So if you look at this chart, you're going to see there's critical levels, right? There's levels I'm looking for price to react to. SPY pre-market plan, critical level of interest is 595 and 59747. So bullish scenario, we're getting a large gap up in pre-market. For me to trade with buyers, I will be looking for strength and structure at or above 59747. This also means bullish criteria at or off open print. Upside targets are 59747 and 59940. What do I mean by bullish criteria at or off open print? That's our 3-step criteria. All the members of my team know exactly what I'm talking about when I say these words, and this is what we're going to break down today in this video. What is bullish criteria? What am I actually looking for at or off open print that's going to allow me to pull the trigger, to actually enter in the market with confidence, with control, and with conviction? So that's our bullish plan. Our bearish scenario is the gap fill, right? We're getting a large gap up in pre-market, which means a large gap down, given sellers can take control of the 1-hour time frame in open print. If they show strength, downside targets are previous day high and end of day, right? So we're getting this massive gap up. Basically what I'm saying is whoever can control the open, I'm going to trade with. And I'm either going to target upside targets or I'm going to target downside targets, right? So once again, I have no bias going into this day other than whoever controls the open, I'm going to trade with. So that leads us to our $1 million question. Josh, how do you define who's controlling the open? Well, that's a phenomenal question, and this is our 3-step criteria we use to determine this. Right? So it's very simple. Price is gapping up large in pre-market, right? So end of day is all the way down. Hold on. If I come over here, about the hour time frame, give this a little more context here for everybody. And I grab my pit number right here. End of day is going to be way right there. And then previous day high, which is the highest price from the previous day, it's going to be right there. So the market looks something like this in pre-market. We're gapping up significantly, meaning price has gapped up from its previous close. I don't have time to go into what the pit numbers represent, but just know they are areas with high amounts of liquidity and volume. So the areas with the most volume and liquidity, price tends to gravitate towards these levels because volume and liquidity move the market. For large money to make money, they have to gather all the volume and all the liquidity. So price is gapping up significantly. So a gap down is highly probable. But we can't just assume that's going to happen. We have to allow the market to tell us that's going to happen. So we have to allow strength and structure to be developed off open print. Now, open print is one of the most significant levels on a price chart because of one reason: the amount of volume that goes into the open. The amount of volume, and I'll just show you guys here, that goes into the open is significant. Look at here. This is the 9:30 5-minute candle, right? We are getting a whopping 1.4 million shares being traded in 5 minutes, right? Because of the open. Look at the next candle. It is diminished more than 50%. So that just kind of gives you an understanding of how liquid this level is on a price chart. It has tons of volume, and as the day goes on, the volume diminishes by almost 90%, right? So the open print has massive amounts of volume. So does end of day, given its value, right? Value is tied to liquidity and tied to volume. Price and volume is what moves the market, right? So if we're in the business of understanding who is in control, whether it be buyers or sellers, we must watch these levels. This is our philosophy over here at HPT, right? It's not to predict things, it's to learn to react to what large money's doing. We can't move the market, but what we can do is learn to understand chart patterns, learn to understand principles, and learn to identify these at areas of value, and then we have a massive edge. So if we can learn to spot who's taking control of the critical level in live time, we now have a high probability setup. And that is the philosophy over here at HPT, right? So open print is established right here at 59626. Price is ripping into our first resistance. So now we're faced with a predicament, right? Buyers are showing up, but there's a resistance right there. Do we A, assume sellers are going to come in and stay sidelined, or do we B, go, hey, if buyers are showing strength off this critical level, I'm going to trade with them? The correct answer is B. We need to trade with the information the market's giving us, not the information we're conjuring up in our head. I don't care if it's at a resistance. I don't care if it's at all-time high. If buyers are showing strength, you trade with buyers. Do not assume, do not predict, always react to the information the market's giving you. So open print's established. We are above the 50 EMA, so now it's time for our 3-step criteria. Number 1 is identify the critical level. In this case, it's open print. Number 2 is identify large money taking control of the critical level. We do this through our moving averages. So you can see right here, I have an indicator that gives an upside arrow or a downside arrow every time my EMA cloud turns from red to green, right? This is the 5 and the 21 EMA crossing. And every time we get a cross, that's indicating that the market is shifting, right? That means conditions have went from, in this case, bearish to bullish. Right? We identify this on a 5-minute time frame. Therefore, we're looking to make entries on the 5-minute time frame. You can also use the 2-minute, but you must identify the criteria on the 5-minute to successfully see the edge we're trying to identify. So we have open print, we have the moving average cross, and then we have the last and most crucial step to this 3-step criteria is the RBI or the GBI. That's an acronym. It stands for red bar that is ignored, right? So when you get a red bar, that's completely ignored, you draw a box around it, and you enter right as soon as buyers push price above the high of the red candle. What is this telling us? This is telling us a bunch of things. A, it's telling us sellers just showed up to the market. They tried and they failed, right? This is also happening at a critical level where there's tons of volume. Therefore, it's significant, right? So we need to trade with the people that take control of the critical level. So we get the open print, we get the moving average cross, we get the red bar that's completely ignored, we're in the market long, and our stop goes below the red bar. Or open print, whatever works better for you. Some people also like to use the EMA cloud. That works as well. And then you're going to notice here, price rallies, and we get a beautiful push up into our upside target, right? So this is a phenomenal way to trade the market open. Once again, it's a simple 3-step criteria. Number 1, identify the critical level. Number 2, identify the moving average cross. And number 3, identify the RBI or GBI, initiating the dominance over the critical level. I hope you guys enjoyed this lesson. It's a very simple strategy. If you guys want more information on this strategy, subscribe to the data reviews below. I send them out monthly. We are going on our 5th month, and it is an amazing way to build confidence, control, and conviction in your strategy. I'll see you guys in the next lesson.